Metro on WDET. I'm Robin Vincent. Since 2015, consumer confidence in the economy has plummeted. That's according to recent consumer survey data by the University of Michigan. But while confidence has declined, spending has remained strong. Why? The Metro's Sam Corey spoke with Professor Joanne Hsu, who runs U of M's monthly consumer survey, about what's caused a decade of so-called bad vibes.
So we really saw a stark decrease in consumer sentiment around the time of the pandemic. So leading into the pandemic, sentiment was fairly strong and fairly stable for several years, and that was coming kind of at the tail end of a historically long period of economic expansion, low inflation, low interest rates, and relatively reasonably strong and stable labor markets. So, I think consumers had really kind of normalized that as a normal economy, when in fact, historically speaking, we don't usually have that long of a period of economic expansion. Mm-hmm. So that's first of all. And then, of course, we had the disruption of the pandemic, which was, really changed our experiences of the world, of the economy worldwide. And so, it was the highest inflation we had seen in decades. And I think that really came as a shock on top of the general shock of the pandemic, economic shutdown, and the pandemic more generally. And so since then, we've had consumers broadly feeling negatively about the economy, in large part because they tell us because of their frustration with persistent high prices. As of the latest read at the end of March, about 47% of consumers spontaneously told us that high prices were eroding their personal finances. So it's pretty clear that that's the number one factor on their minds. And, with persistent inflation and now with the Iran conflict and rising gas prices, it's something that is continuing to weigh on consumers.
People still continue to spend, though, at fairly high rates. Why do you think that is?
There are a couple of reasons for that. So we've been seeing that throughout the post-pandemic period. Early on in 2021, 2022, I think we had a lot of pent-up spending that didn't happen during the pandemic that was shifted to that time. And also labor markets were incredibly strong in the post-pandemic period. So even though consumers didn't feel confident about the economy, they were still willing to spend because they had the incomes to support it. And beyond that, we also have been seeing in recent years soaring stock values. And so that really supports the spending of higher income, higher wealth consumers. And this is important because when we look at aggregate spending, a disproportionate share of that is being driven by high income, high wealth people. And actually, when you look at their sentiment is much higher than it is for the rest of the population.
So they're making up for people so richer people essentially are making up for people who can't spend. They're spending more, like on average. And so even though maybe poor people aren't spending more on average, the richer people are weighing into that.
So the disproportionate spending by high income, high wealth people can obscure patterns happening at the bottom of the income distribution.
Have you looked in looking at the numbers of the consumer sentiment dropped? Have you changed the way you look at consumer sentiment? I wonder if it carries the same weight if people continue to spend at very high rates, or if you're like, I look at this the same way. It really does mean something. It's just an indicator of how unequal we are right now.
I think it's a little bit of both. So traditional leading indicators of recessions, including the yield curve inversion, that would normally predict a recession, and that didn't predict a recession after the pandemic. There are other coincident indicators of recessions that 100% correctly identified recessions in the past, and those were kind of false reports in 2022, 2023. So, this sentiment and spending connection is not really the only relationship to shift a little bit after the pandemic. But I think one of the key things to note is that even though it is true that sentiment levels are quite low compared to other economic indicators, particularly from a historical perspective, the month-to-month changes, year-to-year changes are still perfectly meaningful. We saw a plunge in and sorry, let me back up. Right after the presidential election, sentiment actually went up. After the election was completed, and we had a lot of consumers telling us you should buy large purchases now before tariffs kick in the future. And indeed, we had a surge of spending on durables and cars in the fall of 2024. So we can see that consumers are still kind of making purchasing decisions that are consistent with what they're telling us on the survey. We do have another major difference between now and before the pandemic that I haven't mentioned yet, which is the information environment. So, historically, we Americans typically got their news and information about the economy from the same kinds of places: the evening news, the morning paper, the same kinds of radio stations, and then with the rise of social media in the 2010s, and specifically the algorithmic news feeds at the end of the 2010s leading into the pandemic, now you have a very different information environment that's constantly at people's fingertips.
Tell me about how that impacts people's feelings about the economy and how willing they are to spend.
So what is happening is we have a pretty clear reinforcement. When consumers have slightly negative views of the economy at all, that's being reinforced by what they're seeing on social media and what they're encountering. So as an example, we ask consumers the questions about, what news have you heard about the economy? And we write down what topics they've heard about. And after the pandemic, let me go back to in the 60s and the 70s. So we have data on this going back really far. 60s, 70s, and 80s, that peaked around 20% of consumers telling us they heard negative news about inflation. So 20%. After the pandemic, it went up to 40%. It was double, even though inflation was objectively so much worse in the 70s than it was in 2022. And yet in 2022, we had twice as many people telling us they heard about negative news about inflation. So I want to be clear, I'm not saying that media or even social media specifically is causing people to hate inflation. It could be that you already don't feel good about inflation, and so you're going to click on every link that talks about inflation, and that's going to reinforce your views. So it is kind of a self-fulfilling situation where if you're already feeling a little bit bad about a particular aspect of the economy, you're going to be bombarded either through your own clicking or the clicking of people like you into getting a lot of reinforcing information about that.
I know you talked about this a little bit at the start, but in turn, like the Iran war, fuel prices going up, energy costs going up, I mean, do you anticipate just consumer sentiment to continue plunging because of that? Do you have, information on that?
Yeah. So as of the end of March, we saw that consumer sentiment and views of the future really deteriorated after the Iran conflict began. And in particular, the strongest reactions were in short-run expectations. So what people's expectations for gas price inflation, that quintupled before and after February 28th. Expectations for year-ahead business conditions fell dramatically, and year-ahead inflation expectations also really soared. So consumers were expecting quite a bit of short-run pain. When we asked about the long run, consumers weren't seeing, as of, again, the late March, they weren't seeing as strong of a deterioration. So it seemed like, at least in those initial 3 weeks of the Iran conflict, consumers were bracing for short-term pain, but weren't necessarily expecting severe long-term consequences. But of course, then and now there was a lot of uncertainty. There remains a lot of uncertainty about the duration of this conflict, how long we're going to have an energy shock, when will shipping lanes be restored. So if the conflict becomes protracted, or if the Strait of Hormuz remains closed for an extended period of time, consumers may downgrade their outlook.
Professor Joanne Hsu is the director of the monthly surveys of consumers at the University of Michigan. This is WDET-FM, Detroit Public Radio, your connection to news, music, and conversation. And this is The Metro. We'll be right back after news from NPR and WDET.